Well, good morning. 8 o'clock Central Standard Time. Tuesday, the 16th of September, 2025. Amazing, isn't it? It is to me. So, welcome to Risk Neutral Trading. This is my virtual trading journal. The usual stuff. First of all, it is not for financial or trade advice. As I said, it is my virtual journal. I believe journaling is important. I don't multitask well. I discovered that if I do this stream, everything that I'm watching is captured on the video, and my voiceover here, or my narration, whatever you want to call it, provides insight as to what I was thinking. So I don't have to be screen snapping and typing and doing things through the trading day when I want to be focused on the markets. Now, I'm not monetized for this stream in any way. So your likes and subs, and by all means, drop something in the chat. It is great. Every morning I start the stream at 8 o'clock. The idea here is that it provides full transparency because I have an absolute commitment not to take any trades on these accounts off of the stream. So I stream from now, 8 o'clock in the morning, with the pre-market and news review and things like that, overnight trade, through 1500 every day. Oh, welcome. That's pretty much that. It's in high def, 1440p, the stream. So if you're a little grainy on your end in YouTube, you can click the gear icon there and select high def, and that will be nice and sharp and clear for you. See, everything seems to be flowing properly down the hill here, and trickling and streaming and doing all those kinds of things. Excuse me. The reason for the stream on YouTube is that it provides an additional layer of transparency and full accountability. Once it's there, it's there. And I can review it from any device, which is really handy because I have stand-up desks here, and I'm standing up from 6 o'clock in the morning till 8 or 9 at night. So, it's handy to be able to listen to these stream or review the stream on a different device. So let's get on to it. Now we have we had the retail sales out this morning, and it was up by about 1/10 of a point. So I guess that was kind of the final economy metric that people were a little bit apprehensive about, if you could call it apprehensive at all, with regard to of course, the most famous and important metric of, I don't know, recent memory is this Fed rate decision, which is going to be held tomorrow. So let's get on with the reports and the news. First of all, this is investing.com. There's today. You see that we were up a little bit, up a couple of percent on core. What else have we got here? Export prices were up. Industrial production we're going to get in 10 minutes. That's only a 2 level, but we had retail sales was up. Basically, it was the same as previous, but the forecast was only 2%, so it's up over forecast. It's unchanged from last report. The question now comes around as to who's putting out the numbers. That was the big drama with the Bureau of Labor Statistics on the non-farm payroll, when they Trump didn't like the numbers, so he fired the director and put in his guy. And that was a month ago. And this month, the numbers were much worse. And there was no comment. So we'll see what happens there. This is economic calendar in IR. This is investing.com. It's free. You can filter it however you want. It's also got the earnings reports, which there are nothing. The big moment, I mean, the big, 500-pound gorilla in the room, which seems to be a problem here with this thing now. Okay, deal with you. Then we'll go to Financial Juice. This is the second reporting tool that I use for news. It's got the calendar pretty much the same over here as far as the calendar docket goes. You can filter it. And then it has a bit more of a squawk box feel to it on this side and a little different reporting. What I was going to say was this is the, I kind of like investing.com because it's concise and easy to screen snap and, clear for people to see. Here we are for today, but here's the biggie. This right here is the most important thing people have been watching for months now, screaming and crying about, cut the rates, because they don't care at all anything about the economy. What they care about is their cheap money, which is kind of depressing, but that seems to be the way it works. Now, this is a huge rate. This is a huge FOMC meeting because it is the quarterly review and the quarterly outlook going forward. But this right here, the Fed rate decision, has got to be the biggest. That's got to be the biggest anticipated number in a long time. And they're expecting a quarter basis points cut. So there you go. And here's Financial Juice. And those are the reports. Now let's get to the pre-market, which is pretty important here. Another frickin' gap up day. The best way to put this. Well, this is the ES. We are now trading securely in the Z contract, very definitely the highest volume. So I'm going to remove you from the quote page. There we go. Now I've rolled completely to Z, which is the correct contract. Yesterday was rollover, but it was still behind in volume. If you're trading a prop firm account, like for example TopStep, you'll notice that they automatically roll the contract, whether you have no control over that. They roll it automatically, and we are trading Z. So if you're trading a prop firm thing or whatever else, this is TopStep X. So I thought it was a good thing to show people. Yesterday I also showed this, and they were still trading U. So if you'd have tried to trade TopStep X, you'd have been on the U contract, whether you liked it or not. The bad part about that is that this is, if you were trading with, say, Bookmap or IRT, you could trade whichever contract you wanted, and you would not have been trading the correct contract for that they recognize as a front month, and that could get your ass in hot water. So we have the ES, the NQ, these are minis, and this is the ES micro composite, which is my version of a high time frame. I think it's important. This is an RTH session chart, and these are daily candlesticks. Now, you'll see that yesterday we gapped up and we did not close the gap. I typically do not include those days in the micro composite. Generally, we'll see what happens today, but we're looking to open another gap up. It's just, talk about irrational exuberance. When they pull the rug, it's going to be epic. And it will be pulled. You can bet on that, because the market goes up to go down and goes down to go up. There is no question about that. So the way this works is these red and green lines represent high and low volume nodes. And the values here are pushed to Bookmap. The session prices are also pushed to Bookmap. And this is the market profile full session for the ES. I'll change it to RTH session once we open, as I will these charts. You notice these are full session. They'll be changed to the daily, and that's real simple to do. You just go like that, select the day session only. But I'm not going to do that now because we haven't rolled. You can see that our we're green across the board. What a surprise. Fair amount of volume, and we're at about 0.07% change. So, you know, we're just barely over the top of settlement. And if you look at Bookmap, you can see that there's settlement, and here we are. Now, this is the previous high, and here we trade. You'll see what a useless day yesterday was, about 19 handles wide the entire day session and the limited amount of volume there. I put these blue markers for a visual clue or cue for myself at the session open. So coincidentally, this is the session open of yesterday's RTH, and here's the session open of today's ETH. Pretty desperate. And you can see that there's the previous RTH, or the previous low, and our previous gap low was right down here. It's only by a tick, but it didn't close the gap. No. So that brings us to Bookmap, this is the dome. That ought to be pretty obvious, I hope. Wow, look at there, 690 contracts laying out here at 87.5. That's a pretty big number. Level 2, obviously. This is the micro composite column, which is manually entered here by me. There's an all-time high yesterday, and now we got another freaking all-time high in the ETH up here. They just play leapfrog with each other because the RTH people can't stand having the ETH guys have a record or a level. Here's the gap high yesterday, the gap low. Here's our MCVPOC. Naked volume point of control. This is the high and low volume nodes pushed automatically to Bookmap from IRT. Full session volume profile. Now this is full session or Globex. This is not ETH. This started plotting at 1700 last night. It will continue through 1600 today. RTH session, which will reset this morning at 8:30. And this is an important column for me. This is my notes column. The first thing I do every day is determine the open type that we will have for this day, this upcoming RTH session, and then change the title of that, of the column to that open type. Because when I look back at a screen snap or the stream, whatever, this title gives me a whole lot of information in a hurry. Okay. How do I determine the open type, or how do we determine the open type? First of all, it is where, if we open right here, right now, that's where price is trading. Okay? How does that price, the open, compare with the previous RTH close? Well, the previous close is kind of hard to see here. Right there. It's right under the VWAP here. So the previous close is right here. So we are higher than the close. And here's yesterday's range. So we are out of range. So it's higher out of range, the same as it was yesterday. That will be the open type. Next thing I do is clear the notes for the day. And you'll see that all these statistics that were put in there yesterday at this same time, before the market opened, and where they sat and how they were traded across, etc. Now we go with, first thing we do is set the previous naked volume point of control for the RTH session, which is what I do right there. And that is kind of important to me. So that was 150925, wasn't it? Yes, it was. Okay. So there's the naked volume point of control from yesterday, which has not been revisited yet by a price by an RTH session trade. So it is, by definition, the naked volume point of control of the most recent RTH auction. And that's signaled here by the POCs. So let's move quickly on to these are the from RTH, IRT, these are the session prices, which are pushed automatically. And then they drive these line indicators, which is the same data as the flag. And you'll notice there's no indicator on my book map or my IRT. There are only a few lines, and there's nothing that is not straightforward, probability, or math and market driven, period. And anybody that tries to tell you otherwise is just blowing smoke at you to try to get you to believe them for whatever reason. Typically, they want to get money out of you. There's a POC for the full session and a POC for the RTH. Little brighter yellow for the RTH, a little more muted yellow for the full session. Here's the full session RTH. It's the overnight volume point of control. What does that mean? That's just flags or marks the price at which the most contracts have traded so far in the session, period. The rest of these are straightforward. There's a Globex VWAP, an RTH VWAP, initial balance high and low, which can sometimes confuse people. That is an acronym for market profile. What these two levels really represent are the high and the low of the first 1 hour of the RTH trading session. That's all there is to it. That's it. Straightforward, absolutely. So let's look at the statistics now. That's kind of important. And those statistics are determined from this study in IRT, and coincidentally, it's the same. We opened gap up yesterday also. The study is very simple. It looks back at 2,000 days. Of these 2,000 days, we opened higher in range, 514 of them. Of these 514 days where we opened higher out of range, price revisited the overnight volume point of control 415 times for 80.7%. 80.7. Poof, that's all there is to it. And it would help if I got them lined up right, wouldn't it? There you go. And then I simply go down the list. The next order of business is the overnight high, and that's 77.0%. Overnight high, 77.0. Come on. And there's that. And then we will go to the next one, which is the IB high. That's interesting. So that's right here. Remember, it's that green guy right there. And that is 65.6. And I type this in here because I want to mark that price. Remember the definition. So the minute we open, this flag is going to move somewhere. It's going to move to the high of the current auctioning RTH session. So this won't be here anymore. Previous high is 65.6, and that is right there. Overnight mid is 64.8. Oops, that wasn't very good aiming there, was it? And now I'm going to do something. I need to do a snap here pretty quick that I post every day. at about 8:20. So let me take that snap quickly here. And plop it over here for these guys. Now that snap is something I do. Snap is something that I do every day at 8:20 for the Traders Lab, which is a bookmap Discord chat room started by a guy named Tom B, who I like. This is the snap I put in there. It just kind of shows the levels in relationship, naked volume, points of control, and every kind of a number level you could imagine right up here. And I'm going to remove that from the quote page. There we go. And there you go. So that's something I do every day for the Traders Lab, which is a bookmap Discord chat room started by a guy named Tom B, who is a professional trader with about 46 years experience. And I think he's a good guy. I think he's the real deal. He doesn't call trades. He doesn't trade live. You're never going to see his account postings. Also, you're never going to probably see a wrapped Lamborghini or a bunch of gold chains. So, there's both sides. But I believe he's the real deal, and there's a good crew of people in there. So some of which I've met and trade with in other, in Statistic and other private places. So that's what I do. Every day I make 2 posts in there. At about 6 o'clock, I put in the numbers, the reports and things for the day. And then I do that numbers post every day. So there you go. Not to push it or make a big deal about it, but there it is. I'll be right back. Okay, back at it here. Well, it's 23 now. I've talked about that. I've done the snap. Okay, let's look at the pre-market here now. So our overnight trade is again gapping up. We've traded up all night. Our inventory is essentially high without a question of a doubt. It's long all night long. We did pull back a little bit, but we have not closed the gap. My initial reaction would be typically that we were going to take some profit here because we're 100% long inventory. We have done so in these last few minutes a little bit. So it's highly likely that we will be in a situation as we were yesterday, which was a tight rotational day, only a 19 handle volume the entire day, a range the entire day. Similar situation, you see. We gapped up. We never closed the gap. Boom, bitty, boom, bitty, boom. This is overnight, don't forget. So keep your powder dry. Everybody, I can assure you, well, first of all, this is a big week. We had rollover, which is now complete. We've had the retail sales, which came in 1/10 of a point up. Tomorrow is the huge one. It is the Fed rate decision. There's a couple other data points out. And then Friday is 4 times a year we have a huge triple witching options expiration. And that is this Friday. And as from what I'm told from listening to Tasty Live, Tom Sosnoff, this one happens to be looking at the biggest volume of the year so far. So there's a lot of data and massaging and window dressing and repositioning going on this week. You better have your ducks in a row if you're going to trade. And my advice is to very, very, very definitely only take A-plus trades. Limit your risk. Limit your job as a trader is to provide or protect your account. And so limit your risk. What am I doing here? Okay. Let me get back here. And it's pretty important to be able to trade. So to be able to trade with Bookmap, you need to activate the trade control panel with this padlock. Pick a method you will interact and trade with the application using your mouse. If you choose chart, it's only this data column, active data column. If you choose DOM, it's only the DOM columns. And if you choose both, it's both. Next thing I need to do is select the multi-brackets, excuse me, which is where the risk-neutral methodology is applied. And this is the smallest risk-neutral package of 2 lots because it needs to be an even number. Here's the entire package, and there is 1 stop for the entire package. You can determine the stop size by the volatility of the market, ATR. Most importantly, in the first criteria should be your account risk tolerance. Once this size and stop have been determined, then the first risk neutral scale is right here, and it's automatic. It's for half of the package, and it's for the same number of ticks positively as the stop is negative. And then the balance of the contracts can be runners. If you choose a 4 lot, you can have a couple of runners. That simple. Then I do the multi-account trading, which copies this to the other 4 accounts. And that, boys and girls, means that we've now selected a method. It's green, the padlock's open. I confirm the size of the contract. I can have, these are my in-trade metrics. Notice they're the same as up here. So I can close this, get the real estate back on the screen. I can still trade because it's green and the padlock's open. I have the same in-trade metrics in ticks, not dollars, because I've set it that way. And I have cancel all and close all. So I'm ready to rock. And we're ready for the open in a minute. And when I will start bitching and moaning because this may not set properly. But so you have now your setup. You know about risk neutral. You know that it's a real dicey environment we're in right now, very high risk. Your mission as a trader, your prime directive as a trader is to protect your account by managing risk. It does you no good to spend hours and hours in front of a chart or, however you go about working out your statistics and your strategies and all these kinds of things if you blow your account up and you can't trade. Doesn't it? So here we go. All right, we got 30 seconds here. Good luck. Hook in and hang on. What can I tell you? No more numbers out, and I don't expect any random risk potentially here today. There we go. And we set. Okay, so that's making me happy. That worked all right. And I've got this now set. I've accomplished two things. Number one, I have this set on to reset on session start, and I have configured Rhythmic, which is my data feed, to resync the clock on this computer every 2 minutes. So here we go. Now I'm going to roll these that we've opened. Excuse me. I'm going to roll these charts to today, the day session only. Okay, and we've opened gap up once a freaking again. I'm so sick of that. And save. Well, I would like to save. It doesn't seem to want to here. Very bad, but you know. Here we go. And now by the way, I plot the exact same configuration of charting quickly for the micros as I do the minis, because I'll explain that in a minute as soon as I get through doing this. Got these naked volume points of control off. And save this beauty again. I do that because I push these levels for folks who use micros as well as minis. And I push these session prices starting at 1,700 on Sunday evening through 1,600 Friday night, 24/7. Free. So if you could use those levels and they would be helpful to you, drop something in the chats, like, subscribe, drop something in the chat, and I'll hook you up with these levels. It's free and no problem. You can use them here on Bookmap in the Cloud Notes column for this data on these price lines. And you can also use them in other applications. I suppose Sierra Chart might be able to use them. I don't know. You can, or on just a spreadsheet, and you'll have the levels in front of you all the time. So, another frickin' gap up. Yeah. And another all-time high in the ETH. I hate that. Okay. Now, this is interesting because this is our previous RTH high, right? So, why is that empty? I don't want that to be empty. And I want this to be where it belongs. Well, what have we done? We have traded over our, and this was down here because it moved. This is our RTH, or our EVPOC. We've already traded over that with the open. The open, wherever the open went. I guess we're right. I don't know. This has got me spooked. I'll throw my visual reference line on here. And let's get widened out here a little bit and see what the hell we're doing. Okay, so that didn't work very close, did it? And I'll be honest with you, I don't know how to do that, so I just removed the drawings. Would seem to me you could just grab that drawing and move it pretty easy, but that doesn't seem to be the case for me in Bookmap anyway. Yeah, so there we are up here, then we're now down here, then we were over here. We have traded back and forth over this, so the statistic has been taken. That's the previous RTH or VWAP, VPOC, bleh, football, I can't even talk. We are not correct here from the looks of things. This volume should get up here. Do you see that? How can we have traded up here? With this big poke right here, I guess is what did that. And I don't know how much volume we've got in there, but that just irritated me. This thing used to work perfectly. A lot of volume trading. Wow, we're in the thousands already. Can that be true? I guess it can. And with these kinds of mixed programs, what's happening, right? Are we who's right? What do you look at as the gold standard? There's 1 point high and the session in view. And that just irritates me that it won't be correct and that I can't just grab it. I find that weird. And I'm sure it's a me thing. I'm sure it's a me thing. Anyway, who cares? It is what it is, right? We are real low volume. I've rolled my charting to the the day session only. Another god dang gap up. Oh yes, I need to put in those gaps. Okay, what have we got going on in volume this morning here? Ooh, 75% volume at this time. There's the gap. This is ATR's 2 handles, pretty quiet. Yeah, so welcome. Welcome. I think I'm okay here. We're trading down a little bit. We did close the gap so far today now, so that I'm not going to worry about putting in gap high and all that silly crap for 4 handles, and we've already closed the gap, which we weren't able to do all of yesterday. Oh, there you go. I don't think running back just to be anal is worth it. The open is buried underneath it here, right there. That's the open, so that would be the gap high, and the gap low would have been right down here. And it has been closed. And now we've traded up, we've traded down, the mouse is not working. I'm afraid this mouse is going to die at one point here. I've got backups, don't worry. I have backups of everything. I'm like Mr. Backup. I've got 3 computers, 3 keyboards, a couple of 3 mice, you know. Everything's on a UPS. All of my stuff is hardwired through a Cat 6 LAN from a 10 gig fiber optic. I figure give yourself the best the, equipment and advantage that you can. It's not, if you can't, well, then you can't. But I think that's important. Where are we now? Well, we're trading lower. We've closed the gap. We're down here below that gap. Our value area high from yesterday and the previous IB high is right here. We are now what could be considered a gap rules. And they are as follows. Probably better over here. If we close the gap relatively early in the session, which we have done, and if price gets accepted in previous range, specifically the previous value area, which is right here, there's an extremely high probability, plus 90-something%, we'll trade across that value area. And it is shocking, or not shocking, but reassuring, let me say, the number of times that those old understood situations prove out. So here's our gap. We're in value. Let's see what happened. Let's see what we do. The other side of that is, if we are rejected back out of value and range, then it's a high probability we'll trade in the direction of the gap. I mean, it's just common sense, but that's important to understand. Yeah. Yesterday was just nothing but a tight range chop fest, and they just made a huge batch of retail soup. All those traders who just can't keep from clicking the mouse. And, humans have a real incredible, maybe not good, but incredible ability to see patterns, to rationalize to themselves. It's part of our DNA and our wiring from evolution. If you're evolutionary, or if you believe in evolution or you believe in creation, I think both groups agree that humans have been on the earth for a hell of a long time. And in that period of time, we have evolved. Our minds have changed. Our brains have gotten, bigger and whatever else. And so there's a lot of things that have gotten baked into our wiring. And maybe those things kept us alive, 1,000 years ago. And it's natural selection, right? It's like if we have a trait that if we could see a pattern, or our ancestors could see a pattern and react to that, they survived, and those who could not turned out to be something's lunch and didn't pass on their genes, and it's called natural selection, whether you want to believe that or not. It is the truth. It's the same with all animals and breeds of, everything. So how you can imagine that it applies to all species except humans, I don't understand that logic, but anyway, that's the case. So you're never going to be able to eliminate those things: FOMO, fear, rationalization, tricking yourself, you're never going to be able to eliminate those things because they're in your wiring. That's like saying, I'm not going to be, I've decided I'm not going to be human or whatever else. It's not going to happen. What you have to do in trading, this is strictly my perspective, of course, and remember that this is my journal and that I'm speaking to myself here. What you have to do is recognize those thoughts and not act on them. And that's a huge stumbling block to a lot of people. Now we have taken out the naked volume point of control from yesterday right here. Well, here's our close. There we are. Now he's come out to show himself. We've closed the gap, remember, because of the mid. Now we're down at the close. What are we doing? Oh, we're being accepted in value. And what are we doing now? Well, we've only got a little ways to go and we're already across value. How did I know that? Well, I can see it over here. And I can see the value area low right here. So my workflow is that when we've done something like this, I change the text of that flag to black so that I know that's been traded over and I can remove it. And I can put my little flaggeroonie over here. Yeah, cool. Well, I'm pretty happy about things here. That's the first time that sucker's reset it correctly in recent memory. And I spend most of my day being frustrated and pissed about that. Not day, but, first few minutes being pissed about that. And that's worked fine. So good for me. Now I want to point out to you that this is not a rotational day. There's 1, 2, 3, 4. You could actually make a case for 5 little fractals or distributions so far in the first 20 minutes of the day. Not even 20 minutes. It's only 8:47. We have had a VPOC migration lower, no question about it. These flags, by the way, let me explain that. Previously, I used to keep my chart in at about 5 minutes. And about a point high or less. Well, what did the POC do? How do I know? It scrolled off the left. So I started flagging these migrating volume points of control. So I would know. Now, if I were smart, I'd have put numbers on them, I guess, so that I could see sequentially how the price moved. But then I came up with this idea, and I believe this was a Rod's suggestion. I think it's a great one. Keep the entire session in range. And that's why Blue Boy's up here, because I can just glance out of my peripheral vision or glance left and see that if I see that blue line, I know I've got the entire session in range on the chart. In view, let me put it that way. Big help. When you're getting ready to trade, if you anticipate that you're going to interact with the market, because that's how we approach trading as a business, a statistical, consistently profitable business, not a video game or gambling. Nothing is a surprise. You anticipate a particular setup which is going to develop and which is going to present itself, and you may interact with the market. At that point, you can zoom in and see just what price is doing. But you don't have to for the majority of the day. Come on now. It's easy. This is easy, I'm not saying trading's easy, but what I'm saying is keeping a level head and approaching this logically is the way to go. And, is fairly easy. You don't have to be zoomed in and, to a millisecond or some silly crap. You can see what's going on with the day. What is the day doing? Well, we've traded down. Now we've got quite a bit more volume coming in down here below the value area high. And remember, notice this from yesterday. The value area high to the value area low is only 8 handles. Huge, extremely tight range. Be very careful. So there we go. And let me see what else is going on here. We're approaching, well, there's just 20 minutes. We've been in the market 20 minutes now. How many of you have taken a trade and lost money? You know what I mean? It's amazing. I can tell you, you go to some of the other websites and some of these guys have got, 50 trades in the book. It's amazing. That is suspicious right there. That is suspicious right there. What is that for? These volume dots, which I could make 3D, but I choose not to, just for, why bother using that computing power for something silly like that. These are colored by delta. Obviously, there's buying and selling going on right here, but the color is delta, so sellers were the majority, or the more aggressive, let me put it that way. And we have now closed the gap, and we've now come all the way across value. So the gap rules have played out to the T once again. Well, pretty close to the T, a tick away, a point away. Funny, huh? We haven't closed yesterday's gap. That's still living right here. And there's previous RTH low. That's hard to see here with the way this scale is, but yesterday's low is just one tick above the gap close. So, close only counts in horseshoes and hand grenades, they say, but apparently it does in trading also. What are we doing now, boys and girls? Let's see. We're closing that value. So the gap rules have come to fruition yet once again. Okay, so here we are, out of the jar. Throw a thumbs up. Most importantly, well, that is important because it really helps the stream, and so does a subscriber. So, you know, thumbs up and subscribe if you could. That would be a big, much greatly appreciated. Oh, look at here. Bon dia to the band, Antonio. Crazy week, buddy boy. I hope you're keeping your powder dry there. Tomorrow, of course, is the biggie. And then Friday is going to be the largest triple witching in, I don't know, recorded history or some silly thing like that. There are 4 events. There's 4 triple witching events a year, and this is a big one. It's actually a quad witching in Europe because I think it's individual stock options that they quit doing over here that made it only now triple witching over here, I believe. I could be wrong. Yesterday was ridiculous. If you happen to watch that one. And today we're off to a directional start. We've closed the gap. Yesterday's gap is still open. It was left open by 1 tick yesterday. I don't know if you want to call that, you know, a horseshoes and hand grenades rule or what, but there was the low and here's the gap low. So the important part yesterday was the range was 19 handles all day. We did definitely and successfully roll to the Z contract. Now it's official. It doesn't affect you if you're not trading. You know, if you're trading a TopStep account, it very definitely affects you. But if you're using TopStep X, they automatically roll the account. You have no say in the matter. And yesterday they were trading you. Obviously, they rolled it last night in the at the session change, and now it's now they're trading a Z. So I've removed E from or U from my my quote boards here, and yeah, there we go. What have we got for naked volume points of control? Yeah, well, we've still got the naked one from yesterday. Well, according to me, that was taken out. That's kind of interesting. I guess not. According to my data here, this is where I had spotted it yesterday, but apparently that's not correct because it's saying we still have not taken out that POC. So let me delve into that. Mm-hmm. Well, yeah, right there. Here's the POC, huh? And we have not taken it out, but boy, oh boy, is it close. This thing doesn't do something. My IRT has a problem. The This damn thing doesn't work there. It doesn't want to do the crosshairs very good. 66, 70, and I believe there's some change in there. Okay, so that seems to be borne out. This is correct, incorrect. But it would be taken out now, so I don't get it. I do think this goes down here, though. I still think it's been taken out, or close to it, almost within a tick. I don't know why that wasn't correct from yesterday. Anyway, doesn't matter. Those are the things that don't matter. 66, 44, 75 is also a naked one. This is yesterday's RTH session. Here we are closing the gap. I mean, bearing out the gap rules. Now they got it, by golly. No question about that POC being out of there now. And the gap closed into this and that and something else. Very, very an opportunity where risk management is really important. When these guys, when they pull the rug, it's going to be epic. And it's not a if, it's a when. There has to be a readjustment and the market goes up to go down, goes down to go up. Everybody knows that, right? So, yeah. If we get through this week in one piece, I think it'll be great. Now, of course, in hindsight, all those guys who just knew that this was going to be the double top and short it, good for them. And that would be nice. I am not one of those guys. And I think that's pretty typically a rearview mirror guru kind of thing. Definitely more of a gambling or video gaming kind of a thing than any kind of a vetted trade, which is where I'm still trying to push that forward and stick to my guns there. I've worn my eyes out here lately with this working on the code for back testing the rod suggested parameters for the IB failure, which makes perfect sense to me. That's why I've done it. I can show you what that is later. But boy, I'm tired of it. I've even stooped so low as to send a support ticket to IRT asking them why the hell this doesn't work. Now we'll see if Eddie or Bill get back to me. If Chad were there, this would have been solved a long time ago. disappointing that he is no longer. I'm sure he's happy about it, and hopefully he left there with a big pile of money for him, because he was one hell of a nice guy and really competent guy. Come on now, get up there. There we go. So we have 1, 2, 3, 4, 5 distributions. 6, actually, I guess. Price is definitely just marching lower. No question about that. Antonio's world famous VPOC migration trade is playing out in spades. I've got this one more trade to get off my chest for this IB trade vetting process, and I'm going to be so glad to close the book on that thing. I won't even know what to do. This is really trying even my patience. And I've got more patience than Job, so. Definitely wearing out my eyes too. Code, trading here all day and working late into the night on this code story is killing me. And boy, that trade is working. Your trade's working sweet today, my brother. Mono. Okay, we've rounded the 9 o'clock hour. This doesn't seem to be looking right to me, this whole trade idea. The charting. And I'm sure it's just me being anal, Andy, but you see where price came down per the closed price, or the last. And here's the IB low below it. You see that 103 contracts traded out there. Okay, volume bears that out. But if you were to look at this and you were going, God, look at that, it didn't even get near my stop. Yeah. And actually the similar looking experience over here. There's the IB low, and there's the low of the day is up here. There's got to be a little wick down there. There it is. And IRT is up to its old tricks. Not showing this candle. Okay. All right. Never mind. If IRT is wound in too close like this, it will not update to the next candle. It'll just freeze. Even though the white, the line down here at the bottom is white, you notice that if the line goes like that and turns gray, you know it's not updating. I know it's not updating. And that should say to me that it's updating. Come on now. But it was not. And if I can't see movement on the candle, I know that there's something wrong there. And I need to widen that out to make sure I've got proper coverage going on. And that's now we're okay down here. I'm telling you, boy, I'm about ready to shovel all this stuff in the garbage can and just try to figure out how to use something simple. I spend all my time jacking around with this noise, and I don't know if it's worth it. I had an interesting experience, Antonio. I don't know if you've ever noticed, but the thumbnail for this stream, soon coming or up, whatever it says, the price of the ES, which is a screen snap of my book map, the current price traded on that screen snap or that thumbnail is 42.26 quarter on the ES. That's $123,000 on a one lot to now. Kind of hard. Sometimes maybe it's better to take a step back and just buy and hold. It's kind of incredible. And that's a one lot. Pretty amazing. I was just standing here this morning noticing that and thinking, Jesus. It's 20, what is it? I put it in, mentioned it to the static guys. It's, yeah. The ES was trading 42.4625. And compared to today, that's 2,471.25 handles. At $50 a handle is $562.50 on a one lot. Yeah, pretty amazing. Now the next question is, when did I take that snap? But I haven't monkeyed around there yet to just check it out, but pretty incredible. Oh, we're going to close yesterday's gap too, by golly. Look at us go. Isn't that cute? I'll have to rethink what I'm going to do with the micro composite at that point. What I've done is stopped it here. Here was our gap up that didn't close. Typically, I would include these across, but if this closes back through it after one day, I'll probably just extend the micro composite, I think. And what's happening in the world of volume? Well, we're off the charts up here. Oh, we're picking up. We were down around the 70s here at the open. And we've ticked up from 2 to 3.5, 375 on the ATR. What's this? Come on down here. Come down here and be sociable. There you go. Open interest. This is all for the Z contract now, remember. There we go. There we go. Amazing the number of people that were complaining about being chopped up, taking a directional trade. One of the IB trades directional yesterday. What in the world would you have thought an IB continuation would be here? I mean, that's just losing track of context, I believe. I really like this idea of the blue line over there for the entire. Now, what's the context today? There's absolutely no doubt about the fact that it's down. You look at IRT, that's pretty clear as well. It's lower lows, lower highs, all the way down. And the, down goes the POC, or the IB, etc. So if you were to think about the IB trade, which is what I'm doing, this context would suggest an IB continuation, because that is typically what I understand I should expect in a directional type of a market. as opposed to, I mean, just look at the difference in the day. There's yesterday, and here's today. Now, obviously, they could trade the hell out of this and build this up, fill in these little low volume areas here. But, but. Tasty Trade is on their live platform or whatever. There's a good thing to listen to at the end of every day, trading day. It's called Experts something or another. It's Chris Vecchio and Dylan Bradigan and Ilya Spivak or something. And they just do a recap of the market, and especially Ilya is the macroeconomic head at Tasty. Lots of good numbers and what to look at. Anyway, so part and parcel of what Tasty Trade has done is they have implemented now a free backtesting capability to their platform, going back 15 or 20 years of data, but it's only for options strategies, not for futures. So that was kind of disappointing to me. But one of the things somebody that had tried it out commented was that they weren't sure that Tasty had probably intended this, but they looked at several different strategies, well-known, well-understood, frequently traded strategies over in the options world there, and it was almost impossible to beat by an old in the long term for an index. I mean, obviously, if you got on Palantir or some individual stock, even though even some of the individuals is pretty tough. And I'm gonna step away. So here comes the big trade of the day, I'm sure. So now, what are we doing? Well, they still haven't been able to take out the overnight high. But I'm sure they will. Ooh, we fast approach the IB. So the trade I've been working on betting here is the IB, one of the two initial balance trades, of which there are two. And I guess the first and probably most important caveat I would put is do not trade to the statistic. And what I mean by that is it's widely understood that the IB high, well, let's start over. By definition, remember the IB high and low are just the high and the low of the first 1 hour of the RTH trading session, meaning that this price will go down with price, this one will go up with price, or this level, until 9:30 Central Standard Time. Then they don't go anyplace anymore. At that point, the initial balance statistic becomes active. And that says the following. Going back to our probabilities and our statistics study, there is greater than a 97.7% probability in all four open types that the IB high or the IB low will be exceeded by price at some point in the balance of the RTH trading session for this day. There it is, right there, there, and there. Looking back at 2,000 days, trading days. So, knowing that statistic then, you can't really trade that very well because do you know if it's going to be the high or the low? Do you know that it's going to be the first millisecond after 9:30 or the last millisecond before 1600? It's not the easiest statistic to trade necessarily, but it is a statistic. And so there have been two trades that have been recognized around that statistic, and that they are the following. The IB failure, which is when we have a day like yesterday, which is a rotational day, like right here, completely rotational. What would be what would you imagine the trade would be? Well, if the day is rotational, you wouldn't think that it was going to go, you wouldn't trade directionally away from the distribution. You'd trade into it. In other words, mean revert. Outside in, which is a mean reversion trade, and other people use that as a particular trade setup, and that is a good one because the majority of the trading days are rotational, not directional. But back to this IB setup. So the one option in a directional market is the IB continuation. I'm sorry. In a rotational market, the trade like yesterday would be a mean reversion or an IB failure trade. The opposite of that is a directional day. When we are not rotating, we are moving directionally, then the assumed or the more probable trade would be the IB continuation trade. So the reason I say do not trade to the statistic is, I mean by that, oh boy, we're below the VWAPs, we're below the mid, we're below the POC. I just know we're going to take out the IB low. And so you get short. And then you immediately get salt pounded in your ass because it goes up here and takes out the other side. I mean, it happens very, very, very often and happened to me a lot. And I've got the statistics to prove why you shouldn't do that. You wait for the statistic to happen, to be set, which is in another 3 or 2.5 minutes. And then you wait for price to take the statistic. And does it conform with your setup rules and your criteria that you vetted before or not? That validates the entry. I can't overestimate or emphasize. Do not trade to the statistic. You know, you got short right here. There's 69. You only got to need to get up here and you're stopped out. Remember, these are 1 point high, 4 ticks. 3 of these little boys right here, and that's your stop. 3 of them is your risk neutral scale. 12 of them, 12 points, is the runner. Now, another thing that is worth emphasizing in this environment is don't trade for a scratch. You know, what does that mean? Well, yeah, okay. Say I've got a range requirement which says that there's an unobstructed path from my proposed entry to my first risk neutral scale. Great. I'm not just here to put commissions and trade to my scale, to expose my account to risk in this market for the possibility of a scratch. I want to see, leg room to get to the target. And my target is 12 on this risk neutral trade right there. That's 12 ticks and 12 handles, 48 ticks. My goal is not risk neutral. It's great psychologically. It's great for me. And I think it's a good thing to do for developing traders. And that's why the whole point of the stream is based on risk neutral trading. But it's absolutely not the goal. Be thinking about your profit target. So, remember when I said don't trade to the statistic? Well, we've now crossed 930 right there. We still have not taken out the IB low, nor have we taken out the IB high, so the statistic is now active. This will not move down any further, and this will not move up any further. Do I imagine that we're going to take the statistic at the IB low? Yeah, it looks probable to me, because we're below POC, we're below VWAPs, the mids, we're, well below the mid, meaning then we're, proportionally we're close to the IB low, but still, that's not a statistic. I don't recommend trading to the statistic. I recommend letting this, for me, and remember this is me talking to me. I want to see this statistic be taken. And look at all this noise. Look at all the volume down here. And there's the gap high from yesterday. There's the gap low we never could take out. There's all kind of hocus pocus and secret, coven dancing and whatever else goes on around options and, expiration and witching and triple witching and all this kind of crap that I really don't understand. I think I have a cursory understanding of what they're trying to do and what they're trying to protect, but really. And here's a classic number, the 6666, the IB low. Speaking of witches and devil worship and all that. I guess if 3 6s is the devil, 4 6s got to be devil's dad or somebody, huh? Or devil's mom or whatever else. I think we'll probably take the IB low. At that point, I will need to make a decision if I am leaning towards an IB continuation trade or an IB failure. And to be honest with you, context is saying IB continuation, isn't it? Until recently, when the tanker seems to be kind of turning. And I'll be the first to admit, as desperately as I want to trade and as anxious as I would be to take this next trade, get that profit target and be done with this eval story on these 5 contracts, I am equally hesitant because I'm very aware of that I'm really would be really keen to take that trade. So I don't want to be FOMO-y or emotional about it. I want to be clear and logical. And I'm also very aware of this week and this day and everything that goes on, that's going on. Now, there's going to be a huge, I would suspect a big movement tomorrow. And probably up, much as I hate to say that. Having closed out my 401k last week. But I would anticipate we're going to get a big movement up on the Fed rate cut, which has been baked in and expected and all those kinds of things. I don't know, maybe not up, I guess, but I can't see him pulling the rug after bitching and moaning and screaming and hollering for months about a rate cut, which the Fed already said back in months ago that there would be 2 rate cuts, and they 75 basis points. They did 50, and now they got 25 more. It's not like a big secret. It hasn't been like they didn't say that a long time ago. People forget that and seem to listen to one side of the story. But that's the nature of the new beast, the new short news cycle, governed by tweet or whatever the hell we're doing. By the way, I think the unrecognized, Agent Orange and the Random Risk Band, I think they're headed to England today, so we may not have any off the wall surprises, which is good enough. This week's got plenty of stuff going on. So we had another VPOC migration where if you got short at 69, your butt is going to get puckered up here. And we still haven't taken that IB low, eh? Got a lot of liquidity living down there. Earlier today, I don't see it now, but earlier today, I should have grabbed the screen grab. There were 600 contracts laying around 76, I believe. It was in the thick of it too. It wasn't like a way outlier somewhere. It was 600 contracts. It was before the open. I had to look twice, actually. I should have screen snapped it, damn it. So you see what I was talking about with trading to this stat? Even now that the stat is now active, you're still scratched. You're still stopped out. If you took the VPOC migration, you're, white knuckles. You got one more, well, right there. There was a stop for maybe not. Maybe one tick from stop if you took the VPOC migration trade, which I joke with Antonio about because that'd be the worst. That's got to be the worst one I ever tried to bet. I don't know anybody that trades the thing successfully. I should ask over in the Static or somewhere if anybody actually trades that damn thing successfully. I want to show you something here. Piece of shit. So Antonio, the trade, the setup that Rod and everybody has shared. Here we go now. What are we going to do here? Let's pay attention to the trade. We'll talk about this backtesting story in a little bit. It looks like they're going to get down here and take the statistic, perhaps, after rubbing everybody's nose in it right up here. And if you look at this on a more granular fractal level, what is this? Well, that's outside in. Outside in. Boom, boom, boom. In this rotation. Time frame and fractals or whatever, I don't know if, I guess everybody accepts that as a way to describe it now is really important. And that's where so many traders get hung up, trying to in my opinion, get in way too tight. So over here is an example of, I've set this chart up. I created some custom indicators, which this is the IB high. This is a zone of 3 points below the IB to 5 points below the IB. And this is 1 point either side of the IB, because rods or the static idea for the setup, the rules for the setup of the IB failure was price, and notice that they all start at 9:30 when the IB is set. This is yesterday. Price exceeds the initial balance from the high to the low, so there it is. Price pulls back into the zone, and then price trades back up to within 1 point of the IB high on either case. And you go short. That's the IB failure. Now, at no point did you get stopped out. Your stop is up here, right? It's the same 3-point stop and that kind of thing. And then there is the T1. Come on. And we're going to get down here pretty quick. There's T2. And no heat. I mean, some heat, but no, not within 1.5 points or so of the stop. So that's, and then what I've been struggling with so much to get coded properly so that I could be able to do the back test, and I've got it fairly good. And then here's today, right? So there's that. And this is a custom quote page that has the V. I'm using a lot of variables, user variables here for this coding for these rules, and that's that. The rules look like this. This would be the rules setup. Yeah. Anyway, so that's that. That's what's been burning my brain up lately, and I'm so over it. The idea that you get a proper back test with, look back over so many days and the number of trades and the profitability and the percent profitable and a real back test. And with IRT, if you get it working properly, you can also forward test or walk forward, which means the way that works is, well, let me shut up and get back to the business at hand here. We're going to take the IB, I would guess, for too long. The walk forward is you pick a range of time, say 1 year ago, for however many years, months or something, 1 year, and you back test that, and you get you get a statistic. So many wins, so many losses, percent of probability, or percent profitability, or win rate, whatever. And then you do the walk forward, which is you take those exact same parameters. You can optimize for that back test over a year ago. And then you can take that same optimized back test strategy and run it over untested time frame or trading frame, which would say be the last 6 months. So you've tested over from a year back to 2 years back, and then you run from current to 6 months back. So it's completely different time frame and market, and you see how well that optimized parameters from the previous historical data would apply or would trade out in the current. And that's how that front, forward, walk, and back test works. Whoa, baby, if they don't get down to that stat now, there's going to be some crime. Throwing their toys out of the cot, monitors out the window, what else is going to happen? And I have to really be calm and patient here because I want to definitely, I am so tired of standing here and just talking to this thing. And only one more trade, and then all 5 of these things are payout candidates. Notice we still haven't been able to get down to close that gap yesterday. Why? I have no clue. Other than they're just, irrational exuberance, and they don't want anybody to think there's any kind of reason to be short. So get long, get long, get long, get long, get long, and then whoop, goes the rug. Still couldn't get it, huh? Oh, yeah. I can hear him crying. Oh, no, 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 no. Trump is talking again, and Johnson is talking, and oh, I didn't know that. I thought these guys were going to be in an airplane or off. I guess that was Felicia Mina. Imagine that that there was not going to be any that there was not going to be any photo op, or opportunities to be running your mouth. Quite an interesting development over here with that story around Charlie Kirk. I guess you heard about that, Antonio, or saw the news or something. I don't know. Okay, dokie. One would suppose that they're going to get that IB low at some point. But I can tell you that the more they fluff around down here and the less conviction they have on that IB low, the less conviction I have about an IB continuation down there. Even though the day, the context of the day suggests that would be the expected or trade, because we're directional. Quite a difference between the NASDAQ here yesterday and NASDAQ today. Yesterday in the ES, and here we are today, building our volume, building volume out here, and B is long liquidation typically. So, a B-shaped profile, I should say. Handles. Wow, 22. 22 handles wide so far this range. Yesterday, I think we were at about 19. Clearly stepping down, clearly lower. Now we've kind of bottomed though. And here I stand. Heart in hand. Seems like a line from a song, but I remember the rest of the words. Here I stand, heart in hand, do 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 do, whatever it is. Okay. Getting some Latin music out here. I like that one. Trying to explore some of these other playlists. One is Carnival from Rio, but it's just that tramp music. Boom, 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 boom. You know, it's not, I wouldn't consider it good trading background stuff. Boy, they're getting everybody juiced up down here on the lows, eh? 233 down there at 65. I'm disappointed I didn't take that screen snap. 600, you know, I'm always amazed by that. And I understand spoofing, and I understand all of that stuff, but here's the key part that I always remember, or always comes to my mind. You or I, anybody in the sound of my voice that I suspect anyway, can't put in, if you put an order in the book of 600 contracts, even if it's, 50 handles away from current price, you cannot do that unless your account supports that. Even if you're spoofing, even if you never have any glimmer of an idea that you're going to trade it out. I can't do it. I don't think anybody else can that's listening to me right now or will in the future. So the thing that always comes into my mind is I don't imagine somebody that has enough horsepower and account size to put in a 600 lot order does stuff for the hell of it, for the fun of it, It seems like they have an ulterior motive or some sort of an objective for doing that, whether it's to put a lid on the pot or whether it's to pull price up as a magnet or what the hell that is, those are things to figure out. But I always assume when I see those big orders that guy did that for some reason. And maybe I'm crazy. Maybe they just think, watch this, I'm going to freak all these retail guys out and throw an order in there. I mean, maybe they are doing it just for fun, but it doesn't strike me that would be the case typically, but maybe it is. I don't know. I know one thing. They are making one giant bowl of retail soup right across here, aren't they? Just chop, 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 right around that POC. And all the guys that are down here going, oh, we're going back, we're going long, we're going long. All the guys that are down here taking longs, trying to pick the bottom, are throwing their stops just below the IB. 225 of them right there, and there's another 200 of them right on the IB. And then all the boys and girls that think we're going to take the IB low out and go zooming down through yesterday's stuff are throwing their stops up here around, I suppose, the mid or over the VWAP, which is a big, everybody's so focused on trading the VWAP now. Who's going to win? Who is going to win? My guess is we're going to go short with conviction here for too long. Look at this ledge with no real taper or taper, I guess is the word. On this profile, volume-wise, this is volume. Typically, you know, the auction, now, if you look at it over here, there is a taper. But typically, the auction's got to wind down, you know, they got to go down to where nobody's buying anymore. Then they go up. Or vice versa. Not really a ledge. It's not as ledgy looking as it was over on the market profile chart. But and here's another trick that can get you to do with fractals and time frame. So here we go, lower highs, lower lows. But you get in a time, come in one time frame, and what do you got? Higher lows, higher highs. I mean, that's the thing about the market that can be so deceptive. It's time frame based, it's fractal based. I think you just need, that's why I believe the important approach is probability, and why it's so important to vet a trade and then take the damn thing whenever it shows up. Be the casino, baby. That's the thing to do, I believe. Strongly. That's why I'm trying to vet this stupid trades. Oof, I'm tired of this. But that's why I'm so desperate to get the back tests working and, you know, away from the market, so I don't stand and do this for hours every day, weeks, days and days at a time. I have to be very disciplined about only taking the setup. I can't change the setup. I can't change the configuration. Otherwise, then that trade wouldn't be part of the data set. You know, I have to stick exactly with the bracket that I have, 3-point stop, 3-point risk neutral, and 48 tick profit target. Otherwise, I have to throw that trade out of the data set. You know, if I am determining statistically what percentage of X trades or N number of trades did I achieve T1, did I achieve T2, did I get stopped, did I get scratched, well, then they've all got to be the same levels. If they're not, you're just pissing in the wind. And it looks like they're finally going to get that IB low down here. And if they don't, there's going to be a lot of crying and kicking and screaming, that's for sure. Look at that. $124 for 3 right there. There we go. Now they got it. Now they're breathing easy. And there we go. There's a bunch of stops that got all these boys and girls that thought this thing was going up. Calling the bottom, picking the bottom. Now I have to decide if I'm going to think about an IB continuation trade or not. And I'm about to the mood of think so and hope for the best. I'd like to see it come through this statistic again up to the developing value area low, and they may not do that. Might have been as far as they're going to get. Damn it. Damn it, Janet. Oh, that's going to be kind of irritating, but then again, that's trading. My rule is that they should come down, come back up. Could you call this a test of the IB low? I don't know. That's pretty quick. I would think they're going to come through it again and then down, but you never know. Going to be pretty frustrating though if I miss that trade, because right now would be, wouldn't quite be just below the this 63 is the risk neutral scale right there. But then it's clean sailing down to any profit target. Not that your risk neutral scale is not your target, that's for sure, but at least it's one hell of a big milestone. Well, that sucks. It doesn't suck really, because you don't trade to the statistic that didn't come back through and meet my criteria, and it's not scaled. So it's flirting, baby. It's lipstick on the pig is what that is. And it's a tight dress and lipstick, that's all. Boy, would I like to throw on an IB continuation trade and have it hit and just be able to go, thank you very much. And how important is it to be in line with contacts, eh? Not getting any horsepower here, though, are they? Got a lot of liquidity above us and less than that below us, it looks like. According to this little goodie up here at the top, which I just realized I wasn't doing something here. I normally do that. There we go. This little goodie up here says that the book is positive 0.1.5% long. Now short, it's crazy. Okay, here we are. Back at our IB low and our value area low. Developing value area low. I don't think they're going to go down with it anymore. And don't ask me why I don't think that. There's been an awful lot of irrational exuberance to the upside, and they just barely got the gap closed. No, they did not close the gap from yesterday. Still not. Much as I'd like to take a trade, just get it over with. I don't think it's the right thing to do. And that's the problem that I have with vetting this trade. It comes down to discretion on my entry. And I'm trying to figure out how the hell to get away from that. Now the rod stuff I talked about is for the IB failure trade. But this is not that. This, I would be expecting an IB continuation in this context. And here we are back to POC. It's just, borderline diddle in the middle now. Son of a bitch. Yeah. Just as a point of interest, the developing value area low or high differ from the value area low or high in that the value area low and high are for the previous auction, and this is for the current auction. The developing is the current auction. Okie dokie. And this is diddling in the middle, which is not going to happen. And aren't I glad I didn't take the IB continuation trade? Yes, I am. Nothing pisses you off worse, I can promise you, than missing your risk neutral scale by a tick and getting stopped out. That's just entirely no fun. Entirely no fun. I mean, I'm down to filing my fingernails, for Christ's sake. But I guess I should be encouraged with the fact that I listened to myself and didn't just impulsively start clicking, which seems to be the problem several folks have. That GA, that guy that trades in here sometimes, Antonio, that's Kiloton over in Trader Lab. He's blown up 11 or 12 XFAs in the last month and a half. XFAs. So he does a combine, gets funded, and all 150s. Wow, now and then he calls, or we get on in the Discord for this stream here and have a voice chat. And it's like, dude, just use the brackets, and don't do that. It's just not able to, for whatever reason. Imagine that. I mean, he's got a good job and all this stuff, so maybe it's just good therapy for him. I don't know. Doesn't seem so, though. It seems like he's pretty fixated on getting around the corner trading, as is Garrett, actually. Hold on, the boss is calling. Well, I don't know. Mama's got a pretty good idea out there in the kitchen. I may have to go out and help her out. Boy, they're jerking them around, huh? I don't know what this drama with yesterday's gap low is. It seems to be a pretty big deal to somebody, whatever reason. Oh, forgot my glasses someplace. 81%. We're slowly ticking up. This is holding right around 3.5. ATR. Okay, so what's going on in Looney Tunes land? Jesus Christ. So now, 23 countries now. He's going to pick on 23 countries to do with drugs. Okay, so in his parallel universe, I guess he's gonna do whatever it is he's gonna do. I don't know. Declare war on everybody. I don't know. What a crazy bunch of shit. Retail inventories minus 1%. Or plus 1%. I guess that means it's growing. I can't, hard for me to look at the news anymore. It's just too random and too crazy. Now what are we gonna do? I'm thinking that this line in the sand down here at this previous gap low is real freaking important to somebody, and I'm not sure why. But I don't think it's a prudent idea to take a trade towards there, even though the IB continuation trade, it would be the selected idea. And it may turn around and run now like crazy. I don't know. And then I'll be standing here disappointed with myself. But look at the movement in this. Look at the movement in this bar so much, and this Renko so far, and it hasn't set a new Renko. So we're at a 66, 70, 75. and a low of 66.63. 7 handles either direction. That's not a good thing. If you're trying to get a trade off and go, you know, as I am directionally, as I would be directionally. I don't know what to say. What will happen is if it does fall out and go zooming down, I'll be pissed. And if it goes back up to the POC and just hovers around in here and goes back the other way, then I'll think I was a genius. That's how it works. FOMO, or whatever the opposite of FOMO is. FEMO, I don't know. Feel good mo, I don't know what it is. Any of these would be IB continuation ideas. But then this would happen to you. Then this would happen to you. Then is it going to happen to them again? And taking any of these trades up here, even though they're bar trades, right? This is the consolidation. It's breakout, retest, breakout, retest, breakout. What's going to happen next? Is it going to fall out the bottom? I guess it will, from the looks of it. My discretionary problem is the fact that we've not gotten to scale any of these times we've come up through the IB. Even though context definitely suggests down. Price action would suggest this thing's going to fall out of bed, but well, I'll tell you, it's hanging on. And I guess I don't know a reason why it ought to. There's definitely some black magic going on around that 6,300. Huh? Wow. I think I'm not going to poke my nose down there. Well, I'll tell you right now, the internet gurus, the rearview mirror guys, are really out of this one. And I suppose if you're more of a inclined to gamble about things, that, yeah, okay, good for you. Or perhaps here, when we had a VPOC migration down, a test right here that's close, get short. Once you got short in your scale, then just put on your helmet, put your feet up, and see where the hell this thing's going. No question about that. In my particular case, where I'm working on the IB trade vetting, this day suggests an IB continuation, but boy, oh boy, is this thing working hard to not do that. This would be another idea here. But after all of this and the various tests down here, for whatever reason, this 6,300 is, whether that's some sort of a big strike or I don't know what the hell that is. And maybe now they'll have tested up here and come down through it. I don't know. I know I'll be upset if that's, I'll be disappointed if that's what it does. And if it doesn't, then I won't be, of course. But kind of would think it's going to have to here for it. There we go. Now they got it. For whatever reason that was, it worked. It happened. So finally they got that low. Did they? To the tick, I guess. I guess so, but boy, look at it, turn right around. Turn right around and V up. I have no idea where it might go now. Well, there's a MCVPOC down here below us. 49. So there's a ways down there. If it gets down there to that, that'd be epic for any of those who got on this one right here. And now tell me the difference between here, 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 or here. You know, it's just the luck of the draw, I believe. And disappointment. This short, this short, this short, you're scratched, you're stopped each time. This short or this short paid out. I mean, didn't pay out, but got the scale. Not by much. I mean, after your risk neutral scale, well then great. You just put the helmet on and where it turns out, it turns out. But at least the IB continuation trade has potential for lower. The next major load, major breakthrough down there is the MCVPOC, and not too far below that is a naked volume point of control from Friday. And back up we go. I'll tell you, this market is definitely excited about up. And I'm not going to take this because I'm not confident about it. And I can tell you one thing I'm not going to do is spend the rest of the day working on that back test crap like I did yesterday. My eyes are falling out of my head here. All right, see you tomorrow, Antonio. Well, I can tell you that this is not a target-rich environment day. That's for damn sure. for the targets that I'm working on, the IB continuation or the IB trades. And it's not an IB failure situation because context is down. So that would be in going against them there. Well, here we are back at the back at the POC. The closest thing we got to a trade was closing yesterday's gap, 66 to 62 ish. Barely a scale, certainly no profit target. Do I feel bad? Absolutely not. I realize this is boring. Extremely boring, but my only comment to that is this is my journal, which I share freely, and I hope it's of some help to somebody somehow, even if it's just don't do what I do the opposite or whatever. But and I am following my rules. I will also say that trading is the majority of the time sitting on your hands, i.e. boring. Well, let's see now. So it's important to remember here, and remember I'm telling myself this, or anybody that wants to listen. trading, well, let me start with the basic. Effort is not directly related to reward in trading, with trading, in the trading business, and a lot of other businesses actually. And there's a lot of different ways to say that. You make more money with your brain than you do your back, those kind of things. But those of us who have been raised with some sort of a work ethic, and the idea that you're paid based on the number of hours you work or the stuff you produce or whatever else it is, that's trading is a different world from that. In fact, oftentimes, the less effort expended, the greater the reward. That's kind of what I was trying to get across earlier with this kind of a market environment. Be sure that your reward to risk or risk reward is very heavily or asymmetrically skewed towards reward. And don't just take trades willy-nilly for the sake of trading. Also, very important, I think, you're not in this business to take scratches or scale, or the risk neutral scale or scratch, which means a scratch. You're in this business to take the profit target. That's the point, to get that risk, to get that asymmetrical risk to reward benefit. In this basic 2-lot configuration bracket that I use every day here is it's 2.5 to 1, or 1.5. It's 1 to 2.5 if you look at it from a risk to reward scenario. In other words, you risk 1 and you potentially make 2.5. Big difference. Scalping, or these guys that say trade 1 to 1, I think it's just bullshit and bus tickets. Bad advice, in my opinion. Certainly bad advice for me. If I take my risk neutral scale, my 2-lot risk neutral scale, and it goes to the T1 and then on to T2, it's 60 ticks. And if I take a stop of both contracts at 3-point stop or 12 ticks each, that's 24 ticks. So it's risking 24 ticks to make 60. And if I'm not mistaken, that's about 2.5 to 1. Now I have to leave that alone, because that is the trade that I've been using to vet this IB continuation or the IB trades. And I think I've talked about that enough, why I can't change them. I can't change the parameters of the setup, nor can I change it after a trade is on. Can I move the profit target away? Can I do something with the stop? No. Because in this particular exercise, I'm vetting the trade. I will find out what is the probability of a T1 over 100 trades? What's the probability of T2 over 100 trades, or scratch over 100 trades, or full stop over 100 trades? Those are real parameters. Those are really the metrics that you need to associate for trading. And I'm talking about trading here as a business, as a consistently sustainable business, not a video game or gambling or an adrenaline rush or whatever else. So that's a big difference.
I don't feel bad at all about not taking a trade today, especially in this environment. Well, because of this environment, let's put it that way. Boring YouTube stream, absolutely. I can talk about other things, about backtesting and stuff, if that, which is what I generally would do. But I realize that people don't come listen to a stream because they want to really learn how to trade. Most of them want to just watch somebody take a million trades. Seems like. The part about being disciplined and not over trading and only trading to your specific plan, that seems to fall on deaf ears a lot. Risk management, out the door. Nobody cares. It seems like to me, I don't know. Now, fortunately for me, the point of this stream is my virtual journal. I don't get paid a penny. I'm not monetized in any way by YouTube or anybody. So, if I can be helpful and anybody, it resonates with somebody, or they, the switch flips on or the light comes on that, oh yeah, that's the way to approach this. Great. And this is the way to approach it. So, approach trading. And here we are at the IB low again. Yeah. So, let's take a quick run through the roses here before I mosey off to see what other kind of trouble I can get into here for a little bit. The cats have both come by, and there's been a family intervention that I need to go take a shower, so I guess I'll have to do that, much as I don't want to. So here we are, What is this doing? Well, that's a big B, isn't it? Or if you look over here, a B this way. That in market profileism is that is indicative of long liquidation. In other words, all these, oh my God, let's go, we're going to the moon. Oh, maybe not. Market goes down to go up, and goes up to go down, and goes down to go up, and goes up to go down, and goes down to go up. And what'll happen next, do you imagine? Yeah. There you go. That is the general tempo or heartbeat or whatever you want to call it. That's the methodology of the market. And it only makes sense. If you stop and remember that trading futures is a zero-sum game or business activity. What does that mean? Well, first of all, think of the terminology associated with trading futures. What do we trade? We trade a contract, not a share price or stock or whatever. It's a contract. By definition, it is a contract between a buyer and a seller. A buyer and a seller. What does that mean? Well, it means that there can never be more buyers than sellers or more sellers than buyers. It's a physical impossibility, even in the quantum realm. So if anybody tells you, wow, the price went down because there was more sellers than buyers, it's just, turn around and laugh, and then turn around and walk away. It's ridiculous. In futures, in the stocks, sure, because there's a pool of stock liquidity somewhere. They issued 1 million shares of something, and you can buy that or borrow them and sell them. There can be more buyers than sellers with stock. Absolutely not the case. Impossible with futures. What does that mean? That means that futures goes down because aggressive sellers come across the spread and hit the bid. They hit resting liquidity. How does price go up? Aggressive buyers come across the spread and lift the offer, hitting, resting, taking out resting sell orders. That's how the market goes up or down. But there's never, ever, and it is physically impossible to have more of one than the other. So what does that mean on a bigger scale? Well, that means every time somebody sells, this guy this guy is a buyer, or vice versa. So what happens in the market? Well, the market goes down to go up, and it goes up to go down, and it goes down to go up, and it goes up to go down. And why is that? Because it's a zero-sum game. All of these guys selling here, well, this is a better example for an up market right over here. All of these buyers, buy, taking that price higher, coming across the bid and taking out those offers. They got the price way up here. And what happened? All of the offers that they took out, those guys are all now sitting on a bunch of longs. They're all sitting on sells, right? How are they going to make money? They're going to go down. If this guy that sold up here wants to make money, what does he got to do? He's got to take the price down here as low as he can get it. And this is his profit. And that's it. That's all there's to it. I know it sounds so simple and so elementary, but that's it. And in my opinion, the majority of the sellers pretty much control which way the price goes. Those on the offer, and they're typically the higher time frame, I believe. So when all these little retail guys are going, oh boy, 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 and how's this seller up here that's got all of this? He's been selling. How's he going to make money? And all these retail guys are going to stand here with eggs on their face going, oh, they're hunting my stops. Oh, my God, they're hunting my stops. I really believe that's how it works. And, check it out. Prove me wrong. Let's put it that way. So there you go. And therefore, I believe that the key to trading as a business, a statistical, consistently profitable business, is as follows. You realize that this is a random environment, basically. The outcome of the very next trade over here is 50-50. This is a binary event. Which way can price go? One of two ways. That's binary, up or down. 50-50. All of this history has nothing to do with the next trade. Past performance is not indicative of future results. How many times have you read that somewhere and not paid any attention to it? That is not some legal boilerplate. That is a very important statistical fact to do with gaming theory, and which applies to trading. So what do? You pick out a setup that you see that seems to recur a lot. You identify the parameters that qualify that setup as for an entry, and the general context associated with it, all those elements. And then you capture a statistically significant data set of that specific setup and that specific criteria. Remember, 50-50, it's binary, up or down. Past performance is not indicative of future results. So, you have now identified an IB trade, IB continuation or IB failure, and you're going to copy. I am now capturing a statistically significant data set of that or those, each of which trades with specific identical criteria. I can't say, okay, my risk neutral package, as we already know, is right here. So it's a 12 tick stop, that's 3 points. It's the risk neutral scale is for half of the package, and it's for a positive 3 points. And then there's another 12 points over here, or ticks, as I prefer to think about it. So what's the deal? Well, I can't capture one instance with 3 point stop, 3 point scale, 12 point profit target, and then the next one be a 5 point stop and a 2 point, and a 5 point scale. I can keep the same. Even though I keep the same ratio for risk neutral, et cetera, they've all got to be the same. In other words, otherwise, how could I possibly say over 100 trades, I achieved T1 50 times? If they're not exactly the same, if T1 is not always at the same place, the same number of points. So that's what you've got to do. After you have captured that statistically significant data set, and what do I mean by that? Well, let's look at flipping a coin, binary, right? Everybody knows that's 50-50. If you flip a coin 10 times, nobody's going to be surprised if they get 8 heads or 8 tails or a majority of either. You flip it 1,000 times and it's going to be pretty close to 50-50. So if you capture this IB low or one of these IB trades and you capture 10 of them or 5 of them, that's not statistically significant because those 5 occurrences could well be within a random distribution. Very, very normally you would get 4 or 5 stops in a row. Could, easily. So you need to be outside of that. When you look back at your history and you see, is this setup performing correctly or not? You need to look back at the whole history. out of 100 trades, I was achieving a 45% win rate, and I was achieving T1 blah, blah times. Okay, I'm still doing that. This setup is still okay. So there's some thoughts, right? And that's what I'm doing now, is vetting the IB statistics. And why I'm not going to worry about today. This is basically a now, one thing I haven't been able to do is identify in my mind specifically, let me say this again. I haven't been able to achieve elimination of any discretion with regarding the entry. That's because I haven't back tested enough yet. And identified specifically the steps, the rule steps. Because once you do that, then in following with, anybody that's got a brain and made money, all of the most successful hedge fund managers, traders, people you can think of that trade successfully have realized that this is a business of statistics and probability, and have realized exactly what I just got through describing. You have to identify a setup, take every one of them, and let the law of large numbers manifest that edge or expectancy to your bank account. And that's Ed Thorpe, Jim Simons, Paul Tudor Jones, Ray Dalio, Tom the Trader, Best Loser Wins, Tom B. over at the Traders Lab, Rod, Garrett, local, people that I'm associated with and communicate with continually every day. That's the way you got to do it. And coincidentally, it is the business model of the gaming industry from a point of view of the casino. They play no game, which does not have a predefined edge or expectancy and very specific rules. Then on the casino floor, their mission in life is to play that game as many times as they can in 24 hours, knowing that the edge will manifest itself via the law of large numbers to their bank account. They know full well that they will have a random distributions of losers in a row. Gamblers will win, they'll lose. They don't shoot the dealer, change the rules. They just know that and play the next hand. As we must do in trading. Same exact philosophy, same exact procedure, and that's why vetting the trade, identifying the specific setup, parameters, and rules is so critical. They've got to be identical in order to have the statistics bear out. And after you've captured that data set, you determine mathematically, does this have a positive edge or not? Now, here's another one for you. Win rate is absolute bullshit taken by itself. You see these people on YouTube, I have 98% win rate, this, that, something else, is meaningless. Where win rate is important is when you determine your expectancy. And that means when it is related to the win rate is related to your loss win rate expectancy or ratio, right? So in other words, if you have, and the way you calculate expectancy is the win rate times the average winner over your data set minus the loss rate times the average loser. That gives you an expectancy. If that's a positive number, then you can understand that over the specific amount of, over a trade set of trials or data set of that, whatever it was that you used to calculate your win rate and your average loser and your loss rate and your average loss loser, I should say, win rate and average winner, loss rate and average loser, then you should be able to expect that. And that's exactly how casinos operate and the best traders and hedge fund managers in the world. That is, in fact, the Holy Grail. So Merry Christmas. Early. You got your Holy Grail early this year. And that's exactly the premise that I'm functioning on and why I'm doing what I'm doing here. So there you are. There you are. I think I just was on mute there for the bulk of that, but yeah. The point was, don't be honest with yourself and approach this with open eyes and honesty. And don't. Who are you going to? Who are you lying to? What possible benefit is it for you to lie to yourself? Ooh, scary. All right, so with that soliloquy and fantastically super valuable advice, I'm going to step away here for a bit. Well, imagine that. Nothing. And as I've tried to say a lot, we could turn this thing around and just go zooming the other way or break down. But this is not a high probable the outcome doesn't have a high probability of success. Let me put it that way. That I see. And that's one of the disadvantages to being fully transparent and accountable here with a stream is I only take trades live. I only take them here on the stream between 8:30 in the morning and 1500 in the afternoon. 5 days a week. And, there it is. It would be so much easier to just trade it a couple hours and then make up the rest and do like Matt used to do, where he'd be down a couple $1,000s or something, and then the next morning when he'd open up, his account would be up, positive, and I got back on in the afternoon, or I traded that overnight or something like that. It's hard to believe, maybe true, but hard to believe. So this way, it is absolutely fully transparent and accountable. And as a result, not action-packed. But this is really trading. It's not gunslinging or video gaming. It's trading. So there you go. Well, the volume's inched back up here a little bit. Not a lot. And our ATR is dropping back off. Now we were up as a high of about 4.5. Started the day around 2. Now we're down to about 3. Harmonic rotations, I haven't figured out how to trade that yet, but anybody knows, let me know. This is open interest on the ESZ contract, and this is the SPX. So, hey, welcome. You're just passing through, slap a thumbs up. Subscribe would be really super. Be a big help. Be nice to have a bigger community. Antonio and I and Richard, chat back and forth a bit. We're kind of all over the globe here. Let me know where you are. This is a fully transparent, real live trading, and because of that, it is not action-packed. It's not gunslinging. It is following a trading as a business of probabilities and statistics. And that is really important. I can't stress how important that is, actually. It is the business model of the gaming theory from the point of view of a casino, and the business model of the most successful traders and hedge fund people in the world. It's not something I just cooked up, is the point of saying that. Or no, it's no epiphany that I've had. We are definitely doing some long liquidation in rotationally right here. Very, very low probability, unless you've got a vetted trade, which is a mean reversion. But look at it. It's, what are we talking here? 71 to 66, 71 to, 3 handles. Maybe a little further off the bottom. That is very definitely not a target-rich environment there, or a high probability of success. There's our IRT. I'm a little afraid to look at the... Well, these are the two news feeds I use, investing.com, free. Change the filters however you'd like. Here was the reports out this morning at 7:30. Financial Juice, also free. You can pay for either of these if you want to spend some money. You got to burn in a hole in your pocket or something. There you go. This is the docket, so to speak, of the a calendar similar to this. I prefer this for screen snaps and posting because it's so much clearer and easier to read. But here you are. And then this is more of a squawk box feature, with now 23 countries are major drug transit or drug producers. So that's, I guess, going to be the next thing. Oh, and here they are: Costa Rica, Dominican Republic, Ecuador, El Salvador, Guatemala, Haiti, Honduras, India, Jamaica. Well, you picked a bunch of them out there. Dated September 8th. Wow. Interesting. So yeah, there's, this is more of this Squawk Box has more of a unplanned, unrecognized event, or I don't know what you'd call them, risks. In other words, I don't know what you call the administration, random risk, I guess, because you have no idea what they're going to say or tweet. So that's an unidentified random risk, and the event risks are obvious. It's the numbers that we deal with every day. Here we have the IRT. This is the high time frame. Simply a RTH session chart with daily candlesticks. Wherever the price overlaps, I continue to pull this volume profile, which by so doing generates a micro composite VPOC, and these red and green lines represent high and low volume nodes here in the micro composite volume profile. Those high and low volume nodes push to bookmap. So do the session prices. See, we started the morning green, and now except for gold, we're in the red across the board in the indices. And this is bookmap, where this is the micro composite column. I enter these values manually. High and low volume nodes here. Let's see if we spot some down here. There we go. Full session volume profile, which started plotting last night at 1700. And this is the RTH volume profile, which started reset this morning at 8:30. And this is my notes column, where I enter the open type title for the day, and the statistics, which are input, long before the market opens every day. And then these migrating VPOC flags are kind of not so much benefit as they used to be. And the reason for that is I now keep the entire session visible on my chart, and I use this blue line as just a visual clue. I just slap this blue vertical line on right here, like that, every day at each session open. So there was the overnight session open, and there's the overnight session, and here's the RTH. That's how it goes. So anyway, back to the migrating VPOCs. I used to, now that I keep this entire session in range, I can see the migrating volume points of control here, the yellow brick road. Previously, I kept the scale at about 5 minutes or so. And in that case, where was this line, right? You have no idea, because it's scrolled off the left of the screen. So these VPOC migration flags were important for me to know where we were, and I've missed one right there. And that's how that works. My workflow on these numbers and stuff is when a value or a level has been revisited and is no longer active, I change the text to black in the micro composite column here. And that's how it goes, I'm vetting the IB, the two initial balance trades, the IB failure and the IB continuation trade, and didn't set up today with enough meat on the bone. Here is an IB failure. Gets to scale, to the risk neutral scale, doesn't go anywhere. Fortunately, I was not involved with that. I just didn't have a good feeling about continuation here today. Yeah, and I realize that's ridiculous. That's a discretionary good feeling. That's about a scientific approach, isn't it? but that's, but it's the truth. So, and that's the point of the stream. This is my virtual journal. So why would I bullshit myself? Doesn't make sense, right? This is me talking to me, and hopefully it's beneficial to anyone. I'm happy to share it with anybody that wants to, and hopefully it can be helpful in some way. Leave something in the drop something in the chat, click a thumbs up, subscribe would be great. Yeah, there you go. I start the stream every morning at 8 o'clock with the description and the review of the upcoming reports and numbers. I'll look at the pre-market, where we are, what I think our opening trade's going to be. Today we were gap up, and we've closed that gap. Then I set up Bookmap and show you how to set up the risk neutral trade methodology. And we open and traded all day until 1500, non-stop. And you'll realize something here if you care to look. I share my monitors here, not just my application. So you see at the bottom any open programs and the clock to the second and the date, which coincides with the date and the time here. So there is no possibility of, hocus pocus, nutbaggery. This is the purpose of this stream is fully accountability and fully transparency. Full transparency and fully accountable. Again, who am I trying to kid? This is me talking to me here. That would be pretty crazy, huh? Please drop something in the chat or a thumbs up and a subscribe. That'd be super. That would be a big help. I see numbers here, people, views and things, and I'm concurrent views and who's watching now and that kind of thing. I don't see any names or anything, and I guess that's accurate. I don't really know. As you probably figured out real quick, I am not a professional influencer or whatever, or YouTubeite or whatever you call them. This is my virtual journal, and I realized how to do this and figured it out, and it's a learning experience for me and probably anybody else. And the point of which is it is my virtual trading journal, because I don't multitask well. So I think journaling is important. And the way this works with OBS, which is free, by the way, you can capture everything you see video, and then audio provides, my audio here, voiceover provides insight as to what I was thinking. So I don't have, not required to be screen snapping and typing and doing all that journaly stuff. And I can just capture it all. It's pretty handy. Now the streams are 7 hours long because I want to ensure transparency and full accountability. Every day, Monday through Friday. There you go. I'll be back in a little bit. And what happened now? Oh, nothing. Well, what a surprise. Surprise, surprise, surprise. Yeah, so here we are in a mean reversion. Just busily trading back and forth. Outside in, outside in. Not the trade for me today, but context is was clearly down till right here, and now we're just back a little bit. Definitely was not the trade to take, this IB continuation trade down here. You got scaled, didn't get any profit target, and now stopped, and yeah, I feel good about the whole day. What do we got going on here on a bigger? Here's the micro composite, which is the higher time frame. RTH session chart with the RTH meaning regular trading hours, 8:30 to 1600 Central Standard Time. That's the times that I refer to and the time that you see here on the bottom of my charts. Notice that on my monitors here, they are the full monitor that is shared and streamed, not just the application. So you can see any programs that are open, and also the time, hours, minutes, seconds, and the date tying up here. So this is completely accountable and transparent. And the programs that are open, if you're curious, is OBS, Bookmap, Discord, and Rhythmic. A note for my the hotkeys for the chapters, and a snag it for my screen snaps that I post earlier in the day, typically. This is the this is a screen snap I put every morning. It shows basically the relationship of the past 3 or 4 whatever RTH, ETH trading sessions, and all of the applicable numbers, naked volume, points of control, every number you could think of as far as levels, and the current code stuff, which is essentially this chart right here. These are the session statistics based on the open type. And these are the statistic values that I push in and input into the chart every morning before the market opens. All of these levels, these statistics. And the stream starts every morning at 8 o'clock. Do all the pre-market and all the levels and explanation how to set up Bookmap, those kind of things for the first 30 minutes, and then the open, and it's live and uninterrupted from 08 in the morning until 1500 every day. So here is our market profile charts, high time frame. This is a NQ. These are the minis. This is the ESZ contract that we're on now today. Rolled over yesterday. And these are same complement for micros. What we got here for? Well, the range is, the ATR is pulling back to 2.2 1/4. It was 2 when we opened. And we're at about 78% volume compared to this same time yesterday. And about it. In terms of news, I use 2 sources. This is financialjuice.com, free. You can pay for it if you want to, but you don't have to. This is kind of a docket of reports, and this is more of a squawk box field. And this is investing.com, which is my older preferred kind of a news as far as docket and earnings. It's easier to copy and paste this one, so it's a little bit less confusing for folks. Our big events, of course, if you don't know this year, hiding under a rock. Right here, this is the most important bit of news that the markets have been watching for 2 or 3 months right here, coming out tomorrow. And that's what the market's in a hold for now. Saying that, it's one hell of a week also. Today, yesterday was rollover. We rolled from the U to the Z contract in all of our indices. Today we had retail sales numbers. Tomorrow we have the world famous Fed meeting. There's crude inventories obviously every Wednesday, but crude meeting, Fed meeting, and the rate decision. Thursday we're going to have a couple of numbers. And to be honest with you, I forgot which ones. Let's just look at the whole week. Shall we do that? There's the world famous Fed. We have the initial jobless claims in the Philly Fed manufacturing on Thursday, and Friday we've got just some straight up Baker Hughes rig counts and things. However, on a more important level, perhaps, Friday is triple witching. 4 times a year we have a huge options and contract expiration, and this is it for this. This is the third one, I guess. Obviously it coincides with rollover for the contracts. We rolled from the SEP to the DES contract, and this are options expiration associated with that. 4 times a year is a big deal, really big deal. It's going to be huge volume. So this is one hell of a week to go fishing, chasing your girlfriend, get fit, do something. But in order to keep with the transparency and the commitment here to a continually accountable and transparent stream, I'm here every day. And to figure something else out here, which I'll do on my other monitor quietly. I was looking for. I have a dome and a heat map. Like it looks exactly like Bookmap. I was trying to, but I keep it closed because I don't want it sucking up resources. I was trying to find it over here, but yeah. Anyway, let's do the. Excuse me, I'm gonna sneeze here in a minute. Yeah, let's just throw it on here. Boom, boom. There you go. Looks like it's taking forever to populate. Let's see something here. I think I can do something for you. One thing I've noticed more than once about this is notice the difference in the liquidity. I've never really looked at this together like this before. I'll just leave it like this. And anybody tunes in is going to go, what the hell is this goofy guy doing? Try to find that other one while I'm busy stumbling around here. I don't use the dome really. The only place I ever usually have the dome open on IRT is that heat map chart, which I started building a long time ago, thinking I was going to replace Bookmap, perhaps. If you want a really fast dome, use Jigsaw. That's about the best dome I know about there. That's not it. Every time I want to look at that thing, I forget what I called it. I thought it was that, but apparently not. Yeah, I don't ever use the dome or trade with you see that I've got some, sell all, well, this is the wrong chart, unfortunately, but I've got one that where you can flatten or cancel all, because I'm always thinking about backing something up, you know what I mean? And if I can figure out how to turn this heat map thing on, you probably would like that, but anyway, yeah, sure, no problem. Pleasure. Yeah, oops, I didn't mean to do that. The real, snappy dome, if you want one. If you like trading on a dome, try use Jigsaw. Oops, I shouldn't. I didn't mean to do that. I just crashed Bookmap or IRT. Oops. Oh well, shit happens, eh? Oh well. Back to the drawing board. This is one program that's been giving me trouble with this. Whatever it's called. There's a chart there that's never worked right. Well, we get IRT started back up here. I find it hard to believe that that Bookmap is faster than Jigsaw, but I won't argue with you. Let me think about that for a minute. Yeah, I have owned Jigsaw for probably 15 or something years, and I don't keep it. And you'll see it down here in the bottom, right? If you recognize it, you know that's Jigsaw down there. It's faster than Grease Lightning, that's for sure, and it never crashes, and you can multitask, thread with it and stuff like that. But I am not going to argue with you. I've never really compared it against a dome of Bookmap, to be honest about it. I like the if you're, listen here for a while, I use multi-brackets, and that's a real great tool, and I'm, I use it. So I would love to find an alternative, a cost alternative to this thing, but the book map and stuff, it'd be great. I admire the people that are, trading like TopStep X or something. They don't have volume, they don't have market profile, they don't have volume profile, they don't have anything, and they're making money. So I admire that. Yeah, anyway. Here you go. You do any back testing? I've been stuck in a real rut trying to get a particular back test going properly, and it's usually I don't have too much trouble with it in IRT, but boy, this has been I've been trying to use a specific set of rules which progress over time. And I'll show you what I mean. Come on now. So specifically what I do on this one is, first of all, the code page is just for the V-pound variables, which I set on this various ones, but the way this chart is set up has got indicators, custom indicators, so that I have visual references. This is the IB high, which is not a custom indicator, as you know. Then there is this little tick box, and this one is 1 point or 4 ticks above and below the IB high. This is 3 ticks or 3 points or 12 ticks below and 20 ticks below 5 points. So this is a zone. And then there's a similar one for the IB low down here, but don't worry about that at the moment. And they start plotting exactly at 9:30 Central Standard Time when the IB comes on, so I can just scroll back quickly and see if these things are doing what I think they should do or not, or if I want to backtest manually, I can. So essentially, what the rules are is price does whatever it does and comes up and exceeds, close below, close above, or right on the IB high. That's the first rule. Second rule is, am I showing you the right screen? Yep. Second rule is price trades down to and into this pullback zone. This is a IB failure trade, is the idea. Then it trades back up to a high within this, the IB, or within these 1 point, either side of the IB high, and you go short. Now that's just something that Rod was put forward that he was using in Static as one of the ones that he, one of his setups, and I wanted to code it up because it made good sense. Obviously, you could flip it around and go long for an IB continuation, whatever you want to do, or if you wanted to do something like a mean reversion, or an IB, or anything, a VPOC migration, or any of those other trades, you could do that. But because what you're doing, what I would be doing is establishing a sequential set of rules. And the way I've been doing it is with different rules within the trading, in the backtesting deal, so that it sets a flag. In other words, it sets V-pound 83, 81 is set with this one, with this rule. Then V-pound 82 or 83. I went odd numbers on the IB high failure, and even numbers on the IB low failure. So that's why they're different. But anyway, So this flag would be set when this rule is hit. Then the IB 83 would be when the pullback happens, and 85 would be when it triggers, or either hits here and or triggers the sale, or you go on to the next rule. Really, really not working worth a damn. And I'm usually fairly handy at getting them to work. So that's what I've been struggling with a lot. I even finally had to stoop so low as to send a support ticket. I don't think Bill or Eddie will answer it, but anyway, I did. Since Chad left, I find it tough to get advice or get any help there myself. I have in case you do back testing, I have the project or the trade management piece with the multiple single entry, single stop, multiple price targets working perfectly, and have for a long time. I have different trades, IB continuation and different ones like that already coded up, and they all work sweet as far as that portion. The trade management part works great. I'm happy to share that with you. But the specific rules, the sequential rules on that trade or that back test setup is tough for me to do. The back testing engine works differently than trading, according to what I've read over there on IRT on Linsoft. It runs from the back forward, but there you go. And what a day. Now tomorrow, as you well know, is going to be the mother of all mothers with the rate decision at 1300, and hopefully then we might get, we might get some action and tradable action, but be very aware that Friday is a triple witching, huge triple witching. So this week could be a real good time to be working on your tan, I think. I can't trade with the dome or the dam because I'm dyslexic, so all those numbers turn into soup for me as more graphically oriented, I guess. Here we are back at the mid, huh? Boy, I bet a lot of people got hammered on this IB continuation. And no range here. No meat on the bone. For me. There hasn't been any development on IRT for at least 2 or 3 years since Chad left that I'm aware of. I think Bill Lynn is probably, I heard he'd retired kind of pretty much, sort of, you know what I mean? And had like given the thing to his daughter or something. And Eddie has been around there for a long time as like a power user or something, and now as a developer, kind of filling out for support, I think. But he's not from here. He's somewhere in Europe, if I'm not mistaken. He could be completely crazy too. I could be completely wrong, but that's what I know. And the backtesting thing here is, what am I doing here? There we go. Yeah, the backtesting. For example, this is the IBC, which works pretty okay. These are the trade management pieces right here. The theory that I did on this was that I developed the trade management piece for both long and short. Obviously, it's not like a multi-bracket where you can have one do both. And then all I need to do is redevelop or recreate and change out the entries. So this would be IBC, and there's a short and a long. And you can send it to the chart, or you can run the back test. And let's see what the hell it does for a couple days here. And not very good. So $600 loser, but I really do like the way the data that you get out of the back test. And one thing that's important for me, of course, it doesn't matter now because there's no winner, but this with the 2-lot package, the maximum win and 48 ticks, the maximum winner could be $750 and the maximum loser is 300. So that part fits the criteria. The difference here is that one of the problems is you can't change this to ticks, which is kind of annoying to me. And then you have the really straight up accountability for the every entry, date, time, exactly what was the result and the profit. So it's 2 scratches and two full stops and a scratch on this particular deal for the last couple days. Oh wait, I bet I know something. Oh, I did change it to Z. I was thinking I probably hadn't changed them to Z. Let's see here. Let's do 5 and see what happened. Just to show you what it looks like when there's a winner. No, it's not working. I did monkey with this. I messed around with this yesterday trying to get something else going, and maybe I broke it. I don't know. No, this is correct. Okay. So there's the maximum winner, $750. Maximum loser is $300. And the way those would present here is there's a long entry at 9:35, and there's a T1 long at 37, and it goes through until T2 hits at 11:17 on the 11th. And then that was the only really good one with an IB, and this is a really lightweight entry signal. So I was really keen to get these, this is the entry signal, which is not very complicated. It's just if the low is less than or equal to the IB high, and the low minus 1 bar is less than the IB high, and position is, these are some position indicators that I put up. In other words, 60 and greater than 300. From the end of the session, then it takes the trade and it sets the, this is 50, VPound 50's entry, and then 51 is a first top profit target, 52 is the second profit target, 53 is the stop. and then it sets a couple of flags to do that control the the progress of the trade, so it doesn't close out T2 before T1 or something like that. So there you go. And there you have it. And you can push those. I'm sorry. I guess you can push those to the chart and get a graphic representation of what those results look like. And something you can do with IRT that makes me want to continue on here with this idea is that, let's just pick one again. After you get a back test that you think is kind of handy, you can then wait a minute, where'd it go? You can oh, here you go. You can optimize, and it will optimize the back test. And then you can do a walk forward also. And the way you do that is you back test over a specific range. Say you back test over however long, 2 years, starting a year ago. And then when you want to walk forward, after you've optimized and you've got all your optimized settings for that particular trade setup, then you can switch the back test to a forward, say the last 6 months, and run the optimized back test from historical data over the next 6 months. So it's an actual walk forward. Got some pretty handy. A lot of thought went into this thing. I'm assuming a lot of it came from Chad, I guess. I don't know. Anyway, there you have it. There's all I know about that. I suppose you're familiar with the statistics study and the chart that I plop up every once in a while, every day. And there you go. I don't know if you're still around here, but if you are, and you have Bookmap, I'm assuming that you've got your IRT cloud node levels pushed and all that kind of thing. Although if you don't or don't know how, I can either show you how, which is real simple, or I'm happy to share these, which I share with a lot of people. No problem. My systems come live at 1700 on Sunday evening, Central Standard Time, and run through 1600 on Friday. But I actually keep everything on for into Saturday when I do some maintenance and then restart everything. But as far as the data from can to can't, they're on the data. The hell I did with that trail of intentions thing. Well, another exciting day in the trading verse here. Maybe not. Oh, my power hour, I didn't even notice. Quite the little tussle they got going on right here. All right, here we go around the curve. It looks like they're going to have a big tussle up here, and now they're going to try to sell it down to the bottom. Maybe. Who knows? Yeah. All eyes are on tomorrow at 1500. That much I know. Or 1300. That much I know. This was a real chop fest. Unless you got in early, then you did really well, and congratulations. I don't have any problem not being involved with this. So we can do the recap, however. Kind of did it earlier already, but why not? Got the market on close orders coming up at 1450. And then, yeah. Not very convincing on this closing the gap from yesterday's story, but still didn't get to this MCVPOC or anything, so that's kind of alarming. Market profile. Pretty much says it all right there, doesn't it? Well, volume looks about right. Where net change is down 1.6%. Yeah. Up to 80% here. ATR is still hanging on there. Okay, now let's look at the stuff that matters here. Not the music, but the the numbers. So tomorrow is going to be the biggie. Right here. 1300 and 1330. That's the big number. And they're expecting 25% basis cut, and that's probably what they're going to get. That's pretty well baked in, I think. The big consensus seems to be that there are not any question about tomorrow's cut, but the guidance to do with this statement, whether they're going to be projecting, more hawkish or more dovish going forward next year. And of course, remember that there'll be some changes in the Fed, probably. This is Powell's term expires next May or June, I think. And so going to be real interesting to see what happens then. But here we are. Now, obviously, if they don't cut, better get out of the way, because this thing is going to be a pullback like we saw in April with the famous tariff, showing those pesky penguins who's boss. But I don't anticipate that at all. Thursday, we've got the Philly Fed, which is the only initial jobless claims. And then Friday, as I said, it's pretty much straight up news-wise, but we're going to have the huge triple witching auctions expiration. This is investing.com, the free version. I like it. I've used it for years. No earnings to speak of or to worry about. FedEx, Micron, I don't think it's any big deal. And that's all next week. Or no, this week and then next week. This is Financial Juice, which is a second news source I use, and which will have the, it'll show the market on close orders will pop up over here pretty quick when that comes up. This is kind of the docket for the reporting. I prefer investing.com because it's easier to grab and snap and paste and stuff like that, and easier for people to read. But this will be tomorrow. See the Fed business down here. Oh, and then Trump, of course, not to be outdone, Trump is going to speak on Fox at 1400 to try to get. I thought he was out of the country. Anyway, so there's that. And then this is more of a squawk box affair over here. Yeah. Kind of in the hole is what we're doing. We'll watch for those about 10 minutes. We'll watch for the market on close. It's the market on close imbalance is what it is. Yesterday was about as light as I've ever seen, I think. Pretty crazy. I don't even think I did a screen snap. Nope, didn't. So there we have it. And moving on to Bookmap. Pretty much what it is, right? Never even got near that IB high. Oh boy, it's all-time highs, it's all-time highs, it's all-time highs. Never got near the ETH all-time high, which you know as well, I suppose you do. I very definitely realize will never last for long, because these RTH guys cannot stand to have that record held by the ETH traders. Is my general feeling. And I suppose they're pulling these back today in anticipation of a big thank you rally to the Fed, which has done pretty phenomenal job bringing us out of the huge COVID dump and bringing the economy back and keeping inflation low and employment high. So some other folks would like to think that they have they're the reason that that the market is at all-time highs, which of course is not even close to the truth, but that's just a matter of opinion, I guess. So tomorrow morning at 8 o'clock, I'll be back on. I mean, I'm not signing off now, but you know, I will at 1500 as usual. I try to keep the price ladder here at about 1 point high and keep the entire session in range. To keep myself firmly rooted in the context of the day so I don't get tricked, lulled into thinking something else is going on. And basically we got 10 minutes until the big moment. I can't think of much else to talk about at this point. It's just kind of a boring flipping day. To me, I'm going to look at my email. 4 minutes or something like that. Till the market on close imbalance. Hello? 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 Yeah, right, I got your name, yes. Oh, yeah, I forgot about that. Okay. You're gonna do what to that wall? Oh, right. Okay, well then maybe we better make this for, I'll have to move all this shit in my office, computer gear and all that stuff. Well, yeah, but the problem is my computers are all underneath the window. So I'll have to figure out a way to do all of that kind of stuff. So, maybe like Monday or, well, for me to get stuff done, I've got to get done and then move all my computers and crap like that out away from the wall. Probably be better on a Monday, I guess. And how long does all this take then? Oh, it's all. And they trench all the way around the house, drill all those holes, only inside of 3 hours. Wow. Okay. Okay, so Monday, yeah, so Monday then, okay, cool. I'll tell my wife and get the clan figured out about, about Monday. Thanks a lot. No, help yourself. Yeah, that's fine. I gotta take our daughter to school around 5, no problem, over to the college, so that's no problem. Yeah, yeah, it doesn't matter. You can walk around the house. You're gonna be outside, right? Yeah, no worries. Yeah, no worries. I'll see you then. Cheers. Bye. Okay, well, needless to say, the minute I was standing here waiting to do the thing, the guy calls. So we've got a pretty interesting, we've got 1,314,000,000 market on close imbalance on this buy side. 1,937,000,000 NASDAQ on the buy side. 391,000,000 Dow and 1,021,000,000 buy side Mag 7. So that's some pretty substantial imbalance. Okay. There's that. Now, I guess they're going to be coming to do some. We got termites here, so it's the termite guy. Coming to bum those little termites right out tomorrow, or Monday. I figure Monday's the best day to not worry about. I've got to move my desks and my computers, which is a real monumental pain in the ass. But yeah, that's that. Okay, so we've got the market on imbalance orders. We have the craziness just trading back up. They came down and tagged the IB low once again, and back up they go. Then it closed right out here on the previous close. That's pretty funny, isn't it? There's the open, which was a gap up. So remember that we have basically traded all night and all day. We're right back where we ended yesterday afternoon at 3. That's pretty funny, isn't it? This has been one giant cul-de-sac. One. Oh, yeah. All right. So have yourself a great afternoon. Do something for your health. Get out and get some sun. Give your eyes a rest. Remember that your health and your mental state is far more important than all the domes and charts and data feeds you can have, because that's what's really running the show. So if you're on tilt for any reason, or that can be much more deleterious to you than all the other stuff that we typically pay so much attention to. And I appreciate you stopping by. Slam a thumbs up and a subscribe, and thanks for jumping into the chat there, Create 4. Five minutes, a little bit less. That's pretty funny. Right on close. Pretty funny. See if we can actually look at that. So there was yesterday's RTH. There's the close. There's the close. And here we are. All night, all day. Marianne down by the seaside, sifting sand. There you go. To quote the old tune. That's pretty funny, isn't it? Yeah. That is called speculation, boys and girls. That's how some people make a lot of money, and a lot of traders who can't resist clicking pay them a lot of money. Two minutes here, and then we're going to call it a day. A night, a day, or whatever. In comes the liquidity. Funny that it's only packing the top. Look at this, 1,180 contracts at 75. Wow. That's a lot. That's a lot of contracts. And 8 seconds, 5 seconds, whatever seconds, a few seconds. Bonk. There we go. Somewhere around here I've got a buzzer or a bell or something on this thing. I don't know which is which, but anyway. So there you are. Have a great evening. Get out and do something for your health, for yourself, or whatever, and be sharp tomorrow. Be very sharp tomorrow. 1,300 is going to be a big deal, I think. And I could be completely crazy. But better to be prepared than not, isn't it? All right. Back on at 8 o'clock in the morning for the pre-market. Smack a thumbs up and subscribe on your way out the door. That'd be really cool. Nice talking to y'all. See you tomorrow.